Welcome back to episode 7 of the $100 to $10,000 series. This week we are down 4.76%, and overall we're still up 6.25%. The market responded positively on Wednesday to news that the Fed plans to hold the low interest rate of 0 to 0.25% through 2022, as that is when the Federal Reserve expects the economy to fully recover. As covered in my Do You Have What It Takes to Be Rich video, the Fed's interest rate is the rate that banks lend money to each other. Now, this doesn't mean that you'll be able to borrow money at near zero interest rates yourself, but it does mean that if you do take out loans, the interest rates will be lower than it was before the Fed started cutting its rates. But this also probably means that if you have a savings account, the interest rate in that will also be cut, as banks need to charge its lenders a lower interest rate. There have also been talks of the Fed enforcing what is called yield curve control. This is when the Fed, instead of adjusting short-term rates, tries to control long-term interest rates by buying long-term bonds. This is different from quantitative easing, where the Fed may pledge to spend, say, $1 trillion in buying bonds, which drives up the prices by lowering supply. In yield curve control, the Fed will continue to buy the bond until the market reaches equilibrium at the target price. The Fed has used this tactic before in the 1940s when it needed to borrow a large amount of money towards the war. But interest rates were bound to skyrocket if the government borrowed large amounts at once. So, yield curve control was used to limit the interest rates by purchasing government bonds that exceeded the target rate. But in today's case, the goal is to limit the interest rate from rising in order to allow people to spend more and boost the overall economy. The danger to this strategy is that if the economy does recover, the rate of inflation may jump higher while interest rates are low. Moving on to the news items of the week, making headlines this week for investors and traders alike was Hertz, the car rental company that announced its bankruptcy status last month. Founded in 1912 with just 12 Ford Model Ts, Hertz managed to grow its business to an international scale through its car rental business. And in its most recent annual report released this February, it reported a growing trend, with revenues increasing by almost $500 million from the previous year. But as travel demand basically disappeared from the world, its stock price reflected the business's risky position in the new economy. Hertz stock fell from about $20 to as low as about $3 in just a few weeks. And when the bankruptcy announcement came out on May 22nd, after the company could not pay its $500 million debt that was due, the stock tanked to just 50 cents. But then, something really weird happened. The stock, instead of continuing to drop, spiked up to $5 per share, which, if you bought the stock at 50 cents, would have returned you 10 times what you invested. Now, if Hertz is unable to recover and the company closes its doors, these shares will be worthless. Analysts have been saying that these actions have been driven by market euphoria and fear of missing out of people that have seen major indexes like the S&P and the Dow rising back up as the economy opens back up. You really have to wonder at this point whether these people buying these shares are really buying the company because they believe in the strength of the company making a strong comeback, or if stock traders ran out of stocks to gamble with. Another stock that has been skyrocketing is a company that many people hope will be able to rival a new king in the automotive industry, Tesla. With Tesla shares breaking the $1,000 ceiling, it briefly took the crown of being the most valuable automotive manufacturer from Toyota. The company in question is Nikola Corporation, ticker symbol NKLA. Founded in 2015, Nikola is a designer of hydrogen electric trucks. I say designer and not manufacturer because it hasn't produced any trucks for sale yet. Currently, the share price sits at $64, giving it a market cap of $23 billion. That's only $3 billion lower than Ford's. I am not sure if Nikola is really worth that much at the moment, considering its main focus is on its hydrogen-powered semi-truck sector, which I don't think will be replacing diesel-powered semis in just a few years. Especially so because there are a very limited number of hydrogen fuels recharge stations in the United States, and the cost of setting these refueling stations will force Nikola to start in waist high amount of debt. Not to mention, Tesla also released its version of an electric semi truck back in 2017, which is planned to release in 2021, giving Tesla a head start in the semi market, with Nikola expected to sell its trucks 2 years later in 2023. That's all I've got this week. Don't forget to like and subscribe with the bell notification turned on, and let me know down in the comments what you guys want to see covered.